In today's episode, we're going to explore a strategy that combines options and dividend as an increased source of revenue on your investment. Welcome to the First Principles channel, where we talk about things you can do to make your life better, and we break these things down into simple and easy to understand concepts. Let's get it. In our last episode, we talked about options, what they are, and what they can be used for. If you haven't seen that episode, there'll be a link in the description of this video where you can go and watch that particular episode and get a proper understanding what options are. But we will do a short recap in this video. We will also look at what kind of tools are available for determining the kind of stocks you want to invest in, and these tools are free, by the way. And then we will explore the strategy we're talking about, where we combine options and dividend as a tool to increase the potential revenue on an investment that you have made. And then we will go through a true to life scenario where we will calculate the cash flow returns on particular stocks that can be invested in using the strategy that we've talked about. Of course, nothing that is said here should be construed as financial advice. You want to do your own research, determine what your appetite is, and as they say, the value of your investment can go up or down, so be mindful of that and ensure that you're comfortable with whatever investment you execute on. So, what is an option? In our last episode, we talked about options. An option is a contract between two parties where somebody is selling or buying the right or obligation to sell or buy 100 units of a particular stock on or before the expiry date of the contract. Options contracts can be either call contracts or pull contracts, or you can have a combination of contracts to help you achieve your desired results in terms of an investment strategy. So what is this strategy about? This strategy is about getting the most cash payout possible from your investment in a particular stock. And so what you want to do is to find a high dividend paying stock with growth potential. You're looking for a minimum of 8% dividend payout per annum. And then you want a stock that potentially pays monthly dividends. Then you want to determine what your entry price is for that stock and whether it makes sense for you to sell a put on the stock or just buy the stock outright and start selling calls to generate additional income. Now, when you own the stock, you also then want to determine what your exit price should be, and you sell your call to be the strike price for your exit price, so that when you get assigned, you're selling it at your desired price. And while you wait to get assigned, you're generating dividends from the dividend payouts and also income from the calls that you've sold. Before we proceed, we would ask, we would plead, we would beg, please, if you like the video and what you're hearing, be sure to like and share. If you haven't done so already, hit that subscribe button, click the notification bell, because I guarantee you there'll be more videos uploaded to this channel and you don't want to miss them. And of course, if you have a comment or a question, leave your comment or question in the comment section. We'll be sure to respond. The internet will be grateful that you took these actions. Thank you. So what are these tools? The first tool is Finviz. Excellent website, we'll see it shortly. It's free and it's live market data. Second tool is Yahoo Finance. Also excellent data, also free, and we will also have a look at it as well. A good trading platform, this is not a paid advert, it's just something that is recommended, is Tastyworks. And the reason Tastyworks is recommended is because they cover a wide range of stocks and ETFs that can be used to execute on this strategy. All right, let's see a true to life scenario of what we're talking about here. So this is FinViz. This is live market data that is free. There are few sites on the stock market that are as good as FinViz. What you want to do is go to the screener tab, and then you want to hit the all tab, and you're looking for stocks that you can trade options on. So in the option short drop down, you want to select optionable, and as you can see, optionable becomes yellow and the number of stocks has reduced, but it's still a lot. Then you want to look at stocks that will give you a dividend yield. So in the dividend yield drop down, you want to pick out an amount that is over the inflation rate in the country where you live. So we'll start at 6% here. Again, as you can see, the number of stocks have been reduced. The last screener you want to apply is the signal section. You want to click the drop down and look for channel up. What channel up indicates is that the stock is rising in value. And then next, you want to click on the chart section. And this gives you a view of the stocks we're talking about. So if we look at these stocks, maybe what we want to do is start with ticker symbol MPLX, which seems to be trending up. So this is Yahoo Finance. Excellent website, is free live market data. In the search field, you want to type MPLX and you hit the enter button. And this will give you a breakdown of different elements of this ticker symbol. MPLX, if we look here, it says the dividend yield is 8.71, which is good. Then you want to click on the chart tab. And when you click on the chart tab, you will find useful information on this particular stock. So if we see, it's trending upward after a downward trend in the beginning of 2020. And right now, since January of this year, it seems to be trending sideways between the 30 mark and the 35 mark. So you want to get in at somewhere around that 30 mark, or maybe just buy at market rate. And we can also see the D here, which indicates dividend being paid out. And when we look at the dates for those dividends, the last dividend was paid in February this year, and before that, November last year, and before that, August last year. So this would indicate dividend payouts per quarter. So now let's go to Tastyworks. So we're looking at ticker symbol MPLX with an entry price of 32.45 and an exit price of 33. And based on that exit price, we're looking at selling a call that will expire on the 16th of September 2022. And for selling that call, we will get a minimum of $1.35 as premium. And the number of days to expiry for that call is for 140 days, which is about 1 quarter. Based on that, if we look at the chart in Yahoo Finance, the worst case scenario is we could get 70 cents. So if we plug that in, dividend income is 70 cents. And if we get assigned we will have a margin of the assignment price, which is $33 in this case, less what we paid for it. So that would be 33 take away 32.45, which is another 55 cents. So our gross margin on this trade would be the 55 cents at assignment plus the dividend income per quarter plus the premium paid when we sold the call. That's $2.60. So our return in percentage terms would be the $2.60 divided by what we paid for the share, which is 32.45, which is an 8% return. And if we analyze that, this would be 8% divide number of days, which is 140 times 365 days. That's a 21% return on investment right there, annualized. That is not a bad investment strategy. Now let's look at another option and see how we can calculate a true to life scenario there. So if we go back to FinViz, another option that we see here that is also trending up is EPD. So now let's go to Yahoo Finance and type ticker symbol EPD. So ticker symbol EPD is coming with a dividend yield of 7% per annum and is trading at 26.19. If we look at the charts, again trending down in 2020, but seems to be trending up now. And dividend payouts, last one was in April, and before that January, and before that October 2021. And it seems to be paying about 45 cents in dividend every quarter. So let's call up Microsoft Excel and see how this investment stacks up. So if we look at the strike price that we want to get in, we're buying this at 26.19. We're looking to exit at price point of 28. So based on that, if we go to the 140-day call, we will sell this call and get a premium of 65 cents. If you look at here, the 28th call for expiration on September 16 is 65 cents. The number of days to expiration of this contract is 140 days, which is about 4.6 months, equivalent of 1 quarter. So that means we will get dividend income from 1 quarter at least. And if we look at what it says here, that dividend income translates to about 46 cents, could be more. So this is 46 cents that we've allocated. If we get assigned on the September 16th expiration date, which means if the price of these shares are trading above our strike price of 28, we will have to sell it at 28. And so if we sell at 28 and we bought at 26.19, our profit as assignment is $1.81. Now if we total all of that, the profit as assignment, the income from the premium on selling the call, and the dividend income received per quarter, all of this will total $2.92, which translates into a return on investment of 11% over the investment period, and that would be an annualized return on investment of 29%. Not bad for an investment approach. Double-digit returns on this investment. So we can see the value of combining options and dividend income to increase the potential. Again, if we look at this, this was a stock that was giving us a revenue potential of 7%, but with this approach, we've been able to take that revenue potential to 29% annualized. Again, this highlights the value of deploying this combination of dividend and options to create more value. Thank you so much for watching the video today. If you enjoyed what you heard and what you saw, please like and share with people who might want to see a video like this. And if you haven't done so already, please hit that subscribe button and the notification bell so that you're the first to see new videos when they come out. If you've got a question, please leave the question in the comment section below and we'll be sure to respond. Have a beautiful day and keep making the best of your life.